Hey guys, Jason here for the Chart Guys, filling in for Dan again, still on his well-deserved vacation. In yesterday's video, we talked about the importance of the Asian markets and the potential weight that it had on our own. We were watching those last night in the Chart Guys community, and luckily, we had a pretty solid move for the Hong Kong index, the Hang Seng. If we go to the daily time frame, we can see that we had a pretty good gap up open. Bulls bought the dip and pushed right back up. So what that did was it set a positive tone for our own markets, telling our own markets that the end was not near, not a dead cat bounce, not yet anyway. And now we could look for our own markets to have a positive day. They certainly did. On the SPY side of things, we set new highs. We had higher highs, all-time highs, all-time SPYs. Can that be a thing? Probably not. Anyway, what really matters for the QQQ and for the SPY is actually what's happening right now. And we'll get into that in a minute. But here is our SPY, new all-time highs. A lot of profit taking today. Why? Two reasons. One, it's a technical setup. We hit new higher highs. Now we need to start looking for 4-hour higher lows. So anytime we hit a high, we expect a trend to develop. The market does not go straight up, despite what the weekly candlesticks would have you. Well, not even the weekly, but you get the idea, right? The market does not go straight up. It always takes these times to come down, consolidate, and establish higher lows. That's how you get a trend. So we hit new higher highs on SPY. Great. Now what we need to do is allow these bulls to take a break, to rest and come down and set 4-hour higher lows. So anything over 437.31 on SPY is going to be a 4-hour higher low. If we go to the hourly time frame as well, we have a lot of room to establish hourly higher lows. So there are trends inside trends, and we need to remember that for every new all-time high, there is going to be some consolidation. Now, this is going to get a little bit scarier looking on QQQ because as we are talking right now, we are seeing some pretty significant pullback on our friend Amazon. Let's go look at that right now because as we record, we are seeing the earnings reaction and our big drop right down. Now, where are we hitting for support? Where is that level? We want to go the 4-hour time frame. We are way down here at 339.94.18, and that is the area we have found support in. So unfortunately, that is going to take away a lot of the daily momentum. Look how far the Amazon bears have been able to drive the price down. On the weekly time frame, it's not so bad. That's still going to be a potential for a weekly higher low, but definitely not what we want to see. We want to see more positivity, right? We go to QQQ. Let's go take a look at what happened today. Daily inside bar just peaked back up over the top and pushed back down. Of course, 4-hour time frame looking more significant to the downside. So we'll go to our daily time frame because anything over 360.16 is going to give us a daily higher low. This is really the best case scenario for a lot of these really negative reactions to occur. Why? Because we're at the top of the market. We have a lot of potential for hourly higher low support, 4-hour higher lows, daily higher lows. It's going to take a lot more than one bad earnings report or even a few companies having bad earnings report to really derail this train. And do not give up on the bulls until they give you evidence that they are actually slowing down. On QQQ, anything over 360.16 is going to be a daily higher low, and we have a lot of room to work with on the hourly and 4-hour time frame. Below that, 352.04 is going to be our support. Now, I'm going to be looking to the downside in a lot of these names because I want to establish those hourly and 4-hour higher lows. The bulls have done their job. Now we need to give them an opportunity to rest. The question comes in now, how much power will the bears have and their own counterattack opportunity? So we already covered SPY. We got a good idea what QQQ is up to. Let's go take a look at IWM. IWM pulled off what we wanted it to pull off. It got over top of this big range of resistance that we've been chatting about. And so far, the 4-hour time frame, maybe the hourly is going to look a little bit better. We have come down and we are testing this area as a support. If this area buckles and we go down tomorrow underneath it, we can expect it to act as an area of resistance again. What that was going to look like potentially would be a low and then a high and then a lower low, giving us a beautiful head and shoulders type pattern. That's really all it is. A high, higher high, lower high, let's call it. Put a label on it, call it a head and shoulders, when really it's just price action and failure to establish new highs over supports. But so far, at this moment, the bulls are doing a good thing. They are above the area of support. They need to hold this zone of support, and I will be more confident in their ability to do so once they can break over today's high of day, 224.44. If they somehow pull that off, then our next target is going to be way up here at 226.89. If they don't, I'm just going to be looking for a lower open, test resistance here again, and then looking for a new low, and really After that, I'm not too sure. We'll have to wait to see what sort of fall we get after that, that price discovery opportunity. Every type of trade has essentially two modes of trading. We have our price discovery where we get a little bit of chaos, and then we have our consolidation. So once we have our pattern, that's our consolidation pattern, we have a defined line. In the case of the head and shoulders, they call it a neckline, but essentially it's a support and it's a big psychological level. If we fail to get higher highs and we get lower highs and we lose support, then we get into a phase of price discovery and volume can pick up. And after that, we have to wait and see what happens after the next consolidation phase. So all things considered, SPY, QQQ, IWM, well positioned for the bulls. Now it's up to the bears to see what they can do with this. XLF on the daily time frame, pretty good day. Still have a lot of overhead resistance to deal with. We keep chatting about that, but we go to the hourly time frame. It's all about this new hourly trend. It's picking up pace just a little bit. Higher highs all over. 369.49. We hit a higher high here. Now what the bulls want to do is try to be as confident as possible and establish a higher low somewhere in the range of our EMA 8 and our EMA 26. This big old smush zone. It's a pretty wide zone, but we're going to give those bulls a lot of opportunity. Even if we have a lower open tomorrow, we still have an opportunity to get a higher hourly higher low over 36.49. So we expect trends to continue, and so far they are looking pretty good. XLV daily time frame. We had a strong day. We had a new high. We came back. We had a little bit of a battle with bears, just ever so slightly edging out the day for a red candlestick. Again, we're going to go to our hourly time frame and see what's going on here. Overall, we have our beautiful little uptrend intact, slowing down ever so slightly. If we lose 131.64, we're going to be looking for more substantial 4-hour consolidation with our 4-hour support in the area of 130, somewhere around there. Remember, supports are not always just decimal points. They are zones of support and resistance, just like we see over here in IWM. XBI, not such a great day. Overall, we had our daily downtrend. We were expecting this area to be our high. And I'm not 100% sure. I believe I remember talking about a higher open and then a failure on the part of the bulls to do anything into a reversal and push down. Why? Because, well, I hope I said that because this is a daily downtrend. That's the expectation that we would have. Good momentum yesterday, a higher open, a push, and a reversal into a short. That's what we expect to see in these trends. Continuation of the same pattern of behavior over time. It's when those trends change that things get really interesting. And that's why we draw these trend lines, not to trade with, but to recognize when patterns are actually shifting. We had actually a good example of that on Hood today. At risk of going on a crazy tangent, which I'm often guilty of doing, I'm going to go show you anyway. Here's Hood, 15-second time frame. We didn't have anything to work with as we opened, right? All we had was a psychological level. And our first 15-second candlestick saw us hit 35 psychological, bounce up, and 35 psychological became an absolutely critical level for us. Now we're talking about trend lines. So trend lines here, we can see an area of resistance, multiple touches. When we break that trend line, it does not become a buy. It becomes a change in the narrative. We're no longer accelerating at the same pace. We're actually slowing down. Then we get a new trend line. Once we break that trend, we develop a new trend. So trend lines are not buy signals. They are something has changed indicators. And sometimes what has changed becomes a setup that we can use for our own trade decision purposes. Anyway, let's go back to XPI. Daily downtrend. Bears have the momentum, and our daily support is at 120.62. We actually expect a lower low under that because continuation would have us setting new lower lows on the XPI daily time frame. ARC still dealing with this big area of resistance. 123.42. Our high of day was what? 123.23. Until we get over top of that, it's going to be an issue for us, just like we see on IWM, right? We want these ARC bulls to be able to get above that range, and until they're able to do that, we expect continuation. In this case, continuation is going to be daily higher lows with the key area resistance. We have a lot of room to work with for ARC. If we go to the 4-hour time frame, here's the area resistance again. 4-hour higher lows. Anything over 115.58 is going to be a 4-hour higher low pattern with our defined area of resistance. And we'll be looking for one of those two things to break. Either we lose 115.58 and then we come down. Oh boy, I can do it. Here we go. We come down, break that level, and then look for a 4-hour lower high into a new 4-hour trend, or we get a new 4-hour higher high and try and break that 123.42 level. I like it. Let's see what the bulls can do. Let's see what's next. Tan. The power of sunshine still not quite enough for us. Let's go to our standard charts. Daily time frame still in a tightening range. Today's candlestick indicative of a potential lower high in the 4-hour time frame. I would like to go a little bit higher before seeing reversal, but as always, we're going to go to our 4-hour to hourly time frames to try and figure out if the trend has changed. Has it changed on the 4-hour? No, we have a lot of room to work with. Again, we can come all the way down to that 78.59. That's what we want to see. Where we're going to find that trend change, with that evidence of a trend change indicating that we are going to head back down to that range, is going to be the loss of hourly higher lows. In this case, 83.57. Lose 83.57 tomorrow, we're very likely to be heading back down, having set a nice daily top inside this trading range. On the other hand, if we break 85.43, it's going to be an hourly higher low, and bulls are going to be in a good position. But given what the market is doing, unless we really absorb a lot of this negativity and shrug it off, it's very possible we do that, but I think we're going to get a little bit lower to get the 4-hour higher low. Tan is in a position for daily downside continuation inside this equilibrium. GDX, this was a beautiful one today. Daily time frame, a gap up and just smashed to smithereens. This 35.16 area of resistance, our 35 psychological barrier just crushed. We have to start being a little bit cautious here because this is higher volume, and we have gapped up, so we got to be open to the idea that we are pretty overbought at some short-term time frames, and we're going to be looking for some evidence of consolidation. So let's clear our charts. 4-hour time frame holding up just nicely right now. Hourly time frame, a lot of room to set hourly higher lows. So if you're going to be looking for a sign of reversal, what it's going to look like at this point is likely a lower high under 35.37 and then a lower low. Be cautious of lower lows without any follow through. If we come back up and we come down under 35 again and we go right back up, that is bull flag material. So be cautious. It's not necessarily a short on the break at 35. If you want to go short on this one, you want to get as close to your high as possible, because that is going to give you the most opportunity for short-term overbought conditions, just taking a little bit of gas from all of those traders working against you, and it's going to allow you to protect yourself from potential flag situations where you lose what you think is the key support, but in reality, you're just losing a lower low. No volume behind it, no bears behind it, no one with you. You're fighting by yourself. You don't want to do that. You want to wait until volume's at your side and you have other traders who believe in you. I believe in you. I think you can do it. All right. Someone had requested some metals. I like metal stuff. Silver on the daily time frame, a little bit of broadening range opening up. If we go to the weekly time frame, we can see we have a weekly outside bar. Not uncommon for this to happen. What we're going to be focusing on is the short term. We've changed the hourly trend, which was sideways and down, to a new aggressive 15-minute uptrend. If we go to the 15-minute time frame here, you can see how we have just been chipping away at this. And in fact, it's a little bit in between. 5-minute downtrend, 50-minute overall uptrend, hourly time frame trying to set hourly higher lows. I don't like how aggressive these bears are being. And on the 4-hour time frame, just a lot of room to work with. Really, anything over the 24.50 range is going to be a 4-hour higher low. Not a lot of clarity on the daily and 4-hour time frames. If you want to be trading this one, just be careful. We are short-term overbought. There are a lot of quick flip opportunities in here, but silver doesn't just scream clarity to me right now. Gold on the daily time frame coming up against a key resistance, 1834. That is going to be a big deal for us. 5-minute time frame. Let's see how we're doing here. A little bit too focused. Hourly time frame. Run up, brief hourly consolidation. A lot of room for hourly higher lows. So this looks great for the short term bulls on gold. What we need to do is get that consolidation, get that hourly higher low, and I would love to see it above this range. If we go 18.23.57, if we go back to the hourly time frame, I can see this double bottom. When you see double bottom on an hourly time frame, it's usually indicative of a support on a 5 or 15-minute time frame. So you got to go ahead and double check that. And indeed, we see that coming into play. That'll be a beautiful place for the hourly bulls to get a higher low. So I would be scouting a short-term scalp in that area if you were trading gold. Continuation is the key. Let's see how close we can get to our 1834 area resistance without our RSI being so white hot. 4-hour consolidation. You know what? If we did this on the hourly time frame and built ourselves a bull flag over the next, 8 to 12 hours, that's going to give the 4-hour bars 3 or 4 nice little periods to cool off. And that would be really ideal for the bulls if they're going to try make an attempt to break that key daily resistance. Let's see. Have I done everything? More or less, I think. Well, that was a pretty wild day. Let's see where the Amazon bears are able to get the price to, oh, it looks like they got us through the key level for support rather. 4-hour time frame. It's all about the QQQs though. Even Amazon. It's got some room to work. Let's see, where are we right now? Let's clear our charts. Check out the daily time frame. Now we're going off script, folks. Not that we have a script. We usually do this in one take. In fact, this video is in one take. Weekly time frame. Okay, let's see if we bounce here. Right at our EMA 26. That will be very interesting if we see this is the extent of our bearish attack. We'll check it out in tomorrow's video. Maybe we'll do a little bit of review. Thanks for watching. My name is Jason, partner, co-founder of the Chart Guys, supreme underling to his great hair lord, Dan, who will be back next week. Thanks for watching. Take care.